There we go. What's up? What's up? Hey, Goldfish. Long time no see. Let me actually turn off push to talk here. So, all right, Monk, we're live. So if you're talking, you'll be on TV. Just so you know. Ah, he left the channel. Rip. Rip. All right, so let's see what the markets have to offer for us this week, or have had to offer for us. First of all, how's everybody doing? Hope everyone's had a... Yeah, and thank you for letting me know, Jerry, because I do forget. I'm very bad at names, especially like temporary names, like a Twitch name opposed to like a Discord name. Yeah, me remembering your Jerry's, no. So thanks. Yeah, keep doing that, because I can guarantee you I'll forget again. Welcome, everyone. Yeah, I hope everyone's had a decent week. Of course, a little scare yesterday for people that are in the crypto sphere. A little scare yesterday for people that are in America or that are invested in American stocks with the tax news, of course. And I think now, after the news has been processed, a lot of institutions and investors started going, huh, you know what? He hasn't passed the law yet. He just announced his intentions. And also, you know, he's meeting a lot of resistance already. So who knows what he might pass in the end. I've seen consensus, like estimations of 28%. That's still significant. I've heard, you know, people like Michael Saylor say, oh, well, if that happens, my money's going to disappear in a mysterious boating accident, which... You know, I think ultimately is also bullish for crypto, because it means that, you know, if you put your money in Bitcoin and you put your phrase right there, what's the government going to say? You say, I lost it. Well, you can't tax that. So, yeah, I think that's going to be interesting. I think that the more his administration pushes on capital gains tax, the more capital gains will mysteriously disappear. That's how it's always gone. And we'll see if he gets there in the first place. I think the market got a little scared yesterday, and then, you know, everyone realized, oh, you know what? It's still a year off. We're okay. Like I heard the earliest they might pass it is January 2022. So everything is okay. We're nowhere near any bad spot. Let me go share my screen, or share what I'm looking at right here. See if this works. No, it doesn't. Oh, there it goes. Right off the bat. Let's go. All right. So that's my Binance account. Let's get the old browser up as well. Ye old browser. Switch to dark team, so we have at least some consistency there. And let's get it going. So how's everybody's week been? I've spoken to Goldfish. I see there's more people on. Everyone up, down, flat, bored, interested, scared? Where's everybody's heads at? Welcome back, Monk. I'm currently streaming, so you know you're on TV. Don't tell anyone our top secret, you know, sauce. There we go. So yeah, exciting news about the Discord. Let's start with that. So me and the developer have started an advertising campaign. So we'll see what happens there. We've set up a yo OT Zazzle up, wishing I played the Thursday dip better. Thought the market would be scared longer. I mean, we're not out of the you know, shark infested waters yet. Dead cat bounces have happened, and it's only Friday. So we'll see how the market starts feeling next week. But my instinct says that this is pretty temporary. End of the day, what I look at is real yields. Real yields are still at minus 0.5%. So that's what the market will calibrate to. That means that there's no reason to take your money out of the stock market, even if he taxes you. Because you also get paid. You also have to pay capital gains on your your 3% gain on bonds, and that means that with that 3% gain on bonds and 4% inflation or 3.5% inflation, you're looking at losing money there first and then losing money on capital gains after. So no, I think that what we're going to see is just more money going. Like, you'd rather make money, right, if you're going to get taxed on it anyway. The money will stay in the stock market. I'm not too concerned about it. I wish I got a better entry on some QQQ leaps. Yeah, QQQ leaps are much like VIX. I only recommend playing them if you know what you're doing. I think they're too expensive right now. Decay is just crazy on it, and you need to watch it like a hawk. And I don't have the time to do that, and I don't have the willingness to do that. I am just pretty comfy. Got my ASML. So let me open that up over here. Get us a good look at how ASML has been doing. This is the Dutch side of this. So let's see here. Well, right here at the top we have ASMI, which is the production side of ASML. Then we have the logistics side, ASML, up 1.9%. So doing excellent today there. And more buy recommendations from various analysts. So no concerns here whatsoever. I was surprised this morning. I was up on my portfolio almost 1%. On my long portfolio. I didn't expect that so soon. So that was a nice little surprise. We also saw an incredible bit of strength from, I can actually share this with you guys because this doesn't have any of my portfolio info in it, just a watch list. But this is one of my watch lists that I have here. And these are some of the stocks that I look at every day. So this is Kulicke & Soffa, which is Click, K-L-I-C. I talk about them all the time. That's the logistics side of CLAC, the American Semiconductor company. Now we got ASML right here. I'm not at the instrument Palantir right now, but it's in there. Mara actually up 2.5% today. I don't think anybody saw that one coming. Nvidia up. That was expected. I tweeted about this last week, where the British deal got put off the table. The UK canceled the Nvidia purchase of the ARM company in the UK for national security reasons. Well, like I said, I think if you as an investor expected that deal to go through, you got some major hay in front of your eyes. So I wasn't surprised. I was surprised the price reacted so violently to that news. I kind of thought that it was already public knowledge that that deal wasn't going through. Anyway, yeah, I saw that coming on Nvidia. Maybe I could have bought on the back of that, but I just didn't have the liquid ready for that. I was investing in other things, so just kind of left my position. We got Taiwan Semiconductors. I mean, we all know how TSM performs. Just excellent, 2.5% today. Delicious. BSI, kind of like ASML, Dutch semiconductor company, got their shit together. Excellent performance, so more semiconductor fun for us. CLAC, I mentioned them earlier with Click up 7.2%. CLAC's up 2.19%. You know, for semiconductors, we all know they're my long-term play. So we see 2% here, 2% there, but it adds up. You know, if you add like 2 to 5% every day, and the downturns are minus 5% every month or so, we're seeing a major. Hey, Kanu, thanks for the follow, my man. We're seeing just a major uptick in all semiconductors already, and this is the beginning, right? We're right at the beginning of that ramp up, so I think we're going much higher. I heard on the Discord that some people were scared off by the price a little bit. I wouldn't be. Let me turn down my light a little bit because I'm starting to see my own reflection in my forehead. That's not good. That's better. All right. So yeah, no, for prices, ASML, it looks a little intimidating at first, right? Like $600 or 550 euros. That's a lot of money. But when you look at their market cap, you look at their profits to their performance, you're looking at how much cash they have on hand. The price makes total sense, and they've been paying dividends ever since they were erected, and they never missed on dividends, and they're making tons of money. So. Fantastic company. I wouldn't let the prices scare you so much. I think especially in this environment, the last thing you need to look at is just the price of a stock, like the actual price per share. I think that tells you very, very little. We have the famous example of Amazon, of course. They keep their price high because they don't want people to buy Amazon and then trade it. They want people that are actually serious, so that have the capital to buy more shares than one. Let's see here. Microsoft, good performance. We're expecting, fireworks from Microsoft's earnings. So Microsoft's always been a pretty big position that I had. I think they're doing great on tablets. They're doing great on tech. Their CEO is fantastic. So I like Microsoft, especially as an investment. AG's up, but we all know how I feel about silver. Still bullish as ever. Flow traders up 1%. I mean, yeah, what's there to say? They're coming out with dividends next week, so I'll probably be celebrating that in the Discord with you guys when I know how much money I'm getting from those dividends. Looking forward to that. And then also the week after, we'll be hearing if they'll be paying out special dividends because they have $150 million or 150 million euros in their cupboards that they're not using for anything, that European regulations forcing them to hold. But they're now requesting, hey, Potato King, welcome, my man. They're now requesting from the EU to be able to use that cash to pay special dividend because they are technically not a bank, which is what that regulation was made for. So we'll see if they get that right. Looks like they are going to, and I mean special dividends for stockholders. So thumbs up from me. Let's see, what else? Unity, one of my gaming positions, done very well recently, ever since they IPO'd. No problem here. I mean, we've got this dip here, which is a little ugly, but doing A-okay from my perspective. I bought in like right at the IPO price. What else have we got? Cybersecurity ETF, been up for the past few days. What do you think about small cap growth stocks for next week? These past weeks, we've seen massive declines in such stocks. It depends on the sector. I mean, small caps, you can have small caps in all sorts of sectors. But if you mean small cap tech, I think that growth stocks still will do okay. But I think we're going to see more and more value stocks outperform growth stocks. So I'd much rather see mostly EV tech, yeah. So in EV tech, so I think you're aiming at like Laser here, Microvision, stuff like that. I think those stocks still will grow, especially if Tesla grows, and there will still be plenty of hype around it. I just think that value starts to play more of a role. So companies that actually make a dime already, companies that can show a growth in how much money they're making are going to be more valuable, especially in this inflationary environment, than a company that promises growth but doesn't actually have anything to show for it yet. And we got some losers today. Take-Two's down, which I like to see because I intend to buy them soon. Paradox Interactive, I haven't bought them in a while, but I'm looking at this dip and I'm like, yes, queen. Hut 8, I had to choose between Hut 8 and Hive. I ended up going with Hive. Both of them have been bleeding pretty hard on the back of the unstable Bitcoin and Ethereum price, which is odd because they trade off of Ethereum, which was still fine yesterday. So we'll see. It's a small position, so like I said, speculative. It's less than 1%. And my biggest Bitcoin exposure is in Mara, which is up today. So great. I have some value stocks such as QFin. Let's take a look at QFin. What's QFin? 360 Finance Inc. Sounds like a bank? Question mark? Insurance? Take a look. Fintech, yeah, cool. So I'm a big fan of fintech. I'm in PayPal, I'm in Square, but much less in PayPal. Flow Traders is fintech, so that's kind of the fintech direction I've taken. But I think fintech's cool. If Alipay had IPO'd, I would have 100% bought them. So that's cool. I'm also in Coinbase, so Coinbase is not doing that hot yet. But we're seeing major purchases from groups like ARK, which usually means we'll see a boost in the near future, but we'll see. I think that depends on market mania. If we see more mania on the market, those stocks should do really well, and I'll just pick an exit from there once I've seen some profits. So that's the update on the stock market for me. We're looking at some of the other parts of the sector. We're seeing an uptick in banks today. Insurance, JP Morgan, Goldman Sachs. If you had taken a bet on those a month ago, you would be very happy right now. I still maintain my mantra: no banks. I don't think banks can make a lot of money in the current environment. They're over indebted. They have bad loans out that they're trying to put away. But I think the Archegos situation is only the tip of the iceberg. There is a lot of organizations such as those, and for such an intricate infrastructure of unsecured loans to be able to exist in multiple large name banks should be shocking, but it isn't, which is to me telling enough to not expose yourself to banks, to traditional banks anyway. Big tech's doing great this today, and we're seeing Facebook, we're seeing Microsoft, we're seeing Fang doing a-okay. Salesforce, yum. Yeah, I'm always happy to see Salesforce grow. I have a position in Salesforce, and so Salesforce is doing great for that. And also, side note, the CEO of Salesforce, the owner of Times Magazine, that's an important correlation for me because Times Magazine started taking payments in Bitcoin. Which is really nice for me, because that means, in my eyes, that the guy owning it must have okayed that at some point. So what does that mean for Salesforce? Cool stuff. Other things that I've been doing this week is I have been looking at crypto, of course. I've been deepening my journey into crypto, which means that researching altcoins, looking into shitcoins, looking into what makes these things tick. I've really done some research into Satoshi's white paper yesterday, into proof of work versus proof of stake. And yeah, Kanu, you had a question. Go ahead. Why do people invest in companies already worth hundreds of billions or even trillions of dollars? Because you expect those companies to be worth even more in the future. There isn't much growth potential there. I think that's where you're wrong. I think that what you're looking for in these cases is consistent growth. If you see a 5 to 10% growth on a company year on year, you're already outperforming the market. If you see 15, 20%, that's really good. If you see that year on year for many years, that means that factoring in growth and factoring in those already large numbers just compounds. Yeah, Facebook grows 20% year on year. So I don't know a lot of small caps that can replicate that. So sure, there's multiple strategies, right? You can go for pennies or small caps, or medium caps even, look for 200-300% a year. But that means you need to take 50 of them in your portfolio, because of the 50 that you pick, only 2 or 3 are going to succeed, right? The only 2 or 3 are going to perform the way that you're looking for. So you can kid yourself and think that you can put 2 or 3 in your portfolio and that those will be the ones. But in reality, the strategy for picking small to mid cap winners is picking a whole list of them, taking a whole bunch, and putting them side by side, spreading out your risk and trading them actively, where you take out the fringes and you take out the losers as they come, and you layer into the winners more and more until you end up with a list of 10, 15, of which 2 or 3 are big winners, and you hope your position's big enough to make up for the losses you made in that list of 50 you had at first, and make some profits. But at the end of the day, that growth of your portfolio is still going to be 15 to 20%, because you took all those losses on all those positions that didn't grow as fast as you'd hoped. And with it goes Zuckerberg's net worth. Wouldn't it then be better to buy an ETF? Sure. If you're looking at a sector that you think will do well, like for example, if you think junior silver miners will do well, you can do 2 things. You can either dedicate 3-4 hours of research per day into 50 or so silver miners, of which you're probably going to have a short list of 30, of which you're going to have maybe a list of 20 positions, of which you're going to have 10 positions you're actively trading, of which you're going to have 5 that are favorites of yours. That's full time. That means you don't have much room for anything else in your portfolio. Alternatively, you can go for SILJ, which is Junior Silver Miner Index. That contains, it's an ETF. It contains a lot of junior silver miners. It's actively managed. So at that point, you're exposed to those junior silver miners, and you get the average gain on the industry. But that percentage gain is still not going to outperform, one big silver mine that does well, if that has consistent growth. When you mean research, what exactly are you looking at? Great question. I've been curious about how you make up your models. I am not quite ready to teach how to do my full models. I think that's something that is relatively proprietary to the people I've worked with, so I don't want to expose their methods without getting their okay at first. But once I do get that okay, and I do intend to ask, then I want to do like a crash course, do like a 5-6 episode lesson on how to do it. But if you want a piece of advice, I think you can teach yourself how this works. I think you don't need me to teach you how to do this. I think that if I give you the place to start, you should be able to figure it out, especially if you're serious about it and you put serious time in. So how about I show you this on this stream right here today, right now, where I start, right? Because you have to start somewhere. So I set up a Google Sheet. I put the name of the company down, and I start. At first, it starts as a mind map, right? What do I know about this company? What do I think I know about this company? And I just tick off like bullets. Okay, I know that the company does this. I know that they intend to do that. I know that they're currently worth this. I know that they're growing at this rate. I know that they have this much cash on hand. I know that they have this acquisition on the horizon. I know that they have these costs which aren't very beneficial to them. I just write down what I know, right? Because when I invest in companies, I invest in companies that I know, that I understand, that are in an industry that I'm active in, that I'm interested in. I don't invest in oil because I don't care about oil that much, and moreover, I don't think it's a very profitable sector right now. I don't invest in banks because, well, I know how banks work, but I don't like them. I don't like them in the current environment, so I'm not investing in them. I've never invested in banks. And with that, there's a whole list of other, like biotech. I get tons of questions about biotech all the time. I've never worn a white coat in my life. I am not a scientist. I'm not an egghead. I am not good at biotech. So why the hell would I invest in them? Because I would need to research 50, 60 companies and make a gut check on if their tech is good or not. So the companies that I do start researching are companies that I already have some affinity with, that I already know, that are already on top of mind for me, that are known in the industry. I only pick top threes. That's part of my strategy. I only go with top threes within the industry. Rarely do I invest in number 4 or 5 in a specific industry. So step 1, mind map. Step 2, I look up the company on their website. That's important. I go to their investor relations, and unless I don't trust them, which if I don't trust them to go there, then I don't buy the company. But if I do trust them, I go to their investor relations and I download the last year and a half of financial documents. Earnings, cash flow, balance sheet. Earnings, I give the least attention to, right? I want to know where their money comes from, but I don't really care how their earnings look at first, okay? Why? Because you can really spruce up an earnings report. You can make that son of a gun look sexy as hell. And there's so much accounting magic you can do on the earnings report that to me it's kind of useless, right? Especially at first. So let's put that aside for a second. What I care about is the following. How indebted is that company? Okay. Where are their debts and why are they there? And how long term are they? When do they mature? What's their intention of paying it off? Are they taking on more debt? How do they pay that debt? Do they have income? Do they have cash? Are they making interest? Do they have investments? So I map out those debt, and if I see an environment where they have this much debt and this much income, why that little space in between is going to have to be made up of something. And what are they going to do to make up that debt? They're going to raise capital, and if they're going to raise capital on me as an investor, I don't like that. So that's already a big minus. I write it down there. They're probably going to raise capital on my ass. So point against. Okay. Now the first thing I do from there. And this is my most important key indicator. This is, if you have like a mind map, how you have that center point. this is the one. Free cash flow yield. Okay, write it down. Free cash flow yield. The free cash flow yield is their free cash flow divided by their market capitalization. So shares outstanding. Okay? And what this number does is it shows you the efficiency of that capital, of their cash flow, layered over the amount of their market cap. So that means that if their market cap is very high, their cash flow needs to match that. And unlike PE ratio, unlike a lot of these other ratios, it keeps very well into account the size of a company. And 10, 20 years ago, there were plenty of companies you could find with a free cash flow yield of 4 to 6%. That number is rare. You will rarely find 4 to 6 in this market environment. Okay? And if you do, oftentimes it's for an erroneous reason. It's not for a valid reason that you find that free cash flow yield to be well above 4. I rarely find above 2 to 3. I look for 2 to 3. 2 to 3 is my sweet spot. That's where I start to get very interested. Because that means that they have a positive cash flow coming in, right? That means they're making money on their product. That means they're in an environment where they are adding to their cash position. And if they already have a lot of cash, what you're now looking at is a very strong company because, one, if inflation goes up, they have enough capital to take those hits. They're making enough money to take those hits. If a situation comes up where, for example, supply becomes constrained, they have the resilience to take those hits. Growth stocks don't, right? Growth stocks will have to raise capital or go bankrupt if shit hits the fan. And this company that I'm invested in does not. And that is so freaking important to me because I do not trust the current market environment enough to say I'm just going to go in whatever stock and it'll be fine. Okay, so that free cash flow is so damn important. It also means that if I put, $100,000 in this company, that money, I can multiply that money by the free cash flow yield and think, okay, roughly the efficiency of that money is multiplied by the free cash flow yield. That's how much they compound that money year on year. Free cash flow yield is an excellent indicator, and the third reason why I use free cash flow yield and also free cash flow is everything derives from that, right? That's connected to their earnings. It's connected to their debt. It's connected to their interest. It's connected to their products sold. It's connected to their buildings. It's connected to their depreciation. Everything factors into free cash flow and therefore free cash flow yield. So if you understand how that free cash flow yield came to be, you understand that company's financials. So that's where I start. I start there, and then I start building out my map. And from there, I just take the numbers from their investor relationships. I build out the model, and every time there's a value that comes up where I'm like, this is not as I expected, I investigate. Why is that number what it is? And sometimes I find a valid reason. Sometimes I need to dig a bunch to find out. Sometimes I write them an email and I ask, hey, I was going through your financials and this stood out to me. What's up? And they'll almost always reply. Right? They're very rarely does a company feel too good to email back to their investors. They'll explain, oh yeah, we did we made a purchase of this sort of equipment and it ended up not working out, so we had to dump it all. And that's what you're seeing back in the free cash flow. So start there. Cash flow, free cash flow, build it out from there. Start building out that map. Look for the anomalies. And then when you have that done for your current year, do it for the couple years before. Last few years, far more telling than 10 years ago. So what's important to me is how they did in the last 4 years, roughly 4 to 5 years. Okay, I already have an outlook because I did my mind map, right? I looked at the macroeconomics of the environment that I'm investing in, such as semiconductors. I know the Internet of Things is growing. I think that semiconductors will grow. So I already know the macro. I already know this market has room for growth. Okay, and I can start doing fancy things about what's their market cap and what's their how much of that market is theirs to grow into, how much room is there, what competitors are they able to eat up. All of that is cherry on the cake, right? It's nice, but it's not that telling, like yet. So what I care about is I already know the outlook. What I want to know, where are they now? Where were they the past 5 years? And if they maintain that current pace, where are they in 5 years? And I model that out year on year. So every year I model it out. Okay? 2021, 2022, 2023, 24, and 25. I maintain current growth. And then I start tweaking a bit. What if they double this output? What then? What if they half that output? What then? What if they acquire this competitor and they get this percentage of market cap and they get their production? What then? What if they, and can they acquire that competitor? Do they have enough cash on hand to do that? If yes, why haven't they? Right? Are there plans? What's their last votes been for? Without this information, without this model, I can't do that. So I need to understand for this amount of production, this amount of growth, this amount of income. That's what the information is that makes my model. So with that, I can start playing, right? In my head, I have all the numbers that I need. So if you tell me, if they announce their production is getting 5% more efficient, I know exactly what that means at the bottom line. I know what it means for the free cash flow. I know what it means compared to their debt, and I know what it means for me as a stockholder, because I can now assign a value to their company for each sector of that company, right? For example, let's take Palantir, right? Palantir has multiple products, and each of these products has a certain value to the company. And that value I attribute to the company by how much money it's making for the company and how it's growing. New products often don't make a lot of money yet, but are designed to grow and become money making, and then they have a period of cash cow, and then the product depreciates. Same goes for most companies. So I need to know what's their current cash cow, how well is it performing, how much milk does it have left in it, what's the next one, and how's that going, and what was the previous one, and what went wrong there, or what didn't go wrong there. Maybe everything was fine as it were. So that's what my model is, and it's all in Excel. Sometimes I put a Word document next to it if I need to write it out, but mostly it's just in Excel. And mostly it's just a cash flow. It's just a cash flow analysis. You make a cash flow analysis, and there you go. And you start to go off of those, on tangents off of those numbers. So I hope that answered your question a little bit, Blaster, on what those models look like in Potato King. And I hope that if I can get a positive answer from the people that taught me to do it, that I can do one together with you guys. Again, that would be quite an event, because these models, I put a couple weeks in them of a couple hours work a day. So I can't do one on stream from start to finish. But what I can do is for example, start one and do a couple hours of work with you guys, or finish one and then kind of work back through it with you guys and show you guys what I did. No, absolutely. Happy to tell you guys. Potato King, great info. Thanks, Blaster. Appreciate that response. No, absolutely. So I hope it helps you guys out a bit, and I encourage you to try and do it yourself. Grab that free cash flow, start mapping it out, start putting the information from their investor relations in your own Excel sheet, and start figuring out the numbers from the years before. Look at the growth to today, and map it out to the next year, and then start tweaking the numbers and see what happens. Play with it. I do this half the time, right? If I see 5% growth and that growth gets larger by 1.5% every year, I'm okay. What if it grows by 2% this year? What if it grows by 0.5%? What if it grows by nothing? What if it grows by 5%? What if it grows by 10%? And just start getting a feel for things, and that builds out a model for those companies. And that's how I got to my MAR evaluation as well. End of the day, the math is very simple. At the end of the day, all I had to look at was, what did they buy? Where is it going? What's the exahash they'll be producing? How many coins are they mining? What does that mean in the bottom line when Bitcoin's at a certain value? And when you tell me this company's going to make $1 billion a year, then I can give an evaluation, and that valuation is well above where it's at now. And I think you can really take a lesson from, for example, Peter Lynch here. And at the bottom line, and this is also important to understand with stocks. Stocks behave in the current market environment. Sometimes they behave in a way that you wouldn't expect, right? Almost nihilistic, in the sense that value is a mockery of the stock. And that's true. And that's fine. I'm not bothered. Like, some people get mad about that. I'm whatever. I can dance with the bulls. I can take advantage of that just fine. But at the end of the day, we've had that before. It's not new. It's not, novel. It's not there to stay. We know how the market behaves, and these times of exuberance always get followed by a time of famine. So what I want to do is be ready for when, everyone's partying, everyone's dancing on the table, everyone's drinking, and I'm making sure that I'm the one dancing close to the door. So when everyone rushes out, right, I'm not going to be that sucker who is just going to the toilets coming back to a bill. I just came up with that analogy off the top of my head, but I like it. So, yeah, that's my strategy for the markets, and so the markets are going to go back to normal. They always have this normalization range. As the market comes back to normal, what matters is that stocks or companies that are doing well, that go from doing good to doing better, are going to go up, and companies that are doing better to going that go to from better to great are going to go up, and stocks that go from great to perfect are going to go up, and stocks that go from doing okay to doing not so okay are going to go down, and from not so okay to bad it's going to go down further, and from bad to terrible it's going to go down further. That's what you need to understand. Those are the ranges you're working in. And I need to make sure that I pick stocks that go from normal to better, and from better to great, and from great to perfect. That's all it is. So, and those models help with that. But at the end of the day, I don't do anything too fancy next to that. I don't, sometimes you see these analyst reports or DCF models, and you're like, whoa, I could never do that. Look at all these numbers that go into here. Really, it's not that hard. And I really encourage you to try, because I think that it will open your eyes as to how easy it is to do some basic analysis. And honestly, your basic analysis is going to be better than those 200 people that on Discord tell you, "Oh, you need to do all these complicated models and complicated formulas to make it work." No, it's really simple. And end of the day, there's a lot of gut feeling there too, and a lot of just knowledge about the industry. If you are, let me even make it simpler for you. If you are investing in something and you know it well, you know yourself well enough to know if you know it well or not, you are going to make stock picks that will win, even when you do zero analysis on the company. Right? But you do need to know the industry. If you're a fervent gamer, buy gaming stocks. What are you doing buying stocks in oil, right? What do you think as a student who doesn't have much time I should do? Just invest in ETFs. Good question. I think if you don't have a lot of time, you should just invest in ETFs. Yes, if you don't have time to investigate a company, take an ETF in an industry that you understand, an industry you think will go up, and just let your money work for you without you having to do so much work that you run out of time. You should focus on your studies. And then when that's done, you can always take your money out of the ETF and go into something else. Blancor, do you think I should buy stocks in Elon's new venture to replace the world's rainforest with car factories? No, everyone knows that I'm not a big fan of Elon, so no, I think that Kirby Toe Elon is one of the world's greatest con artists, and I don't please don't call me pedo Elon for being mean. Yeah, I think that Tesla is a bad investment, and I think that drill a hole in your skull and put a chip there made by Elon is a bad investment. I think that SpaceX is a bad investment. So you can't even invest in SpaceX. But if he ever goes public, I wouldn't. Nikola is better than Tesla. Their trucks look pretty cool. Yeah, and I heard that they're well oiled because they can roll off a hill real good. All right, so going into the final 20 minutes of the stream, so we went over a bunch of stocks. I want to talk about some crypto. So I did a bunch of research into DeFi. House of Adam. Anyone that manipulates a coin makes me question what else they can manipulate. Yeah. Before he manipulated a coin, you referring to Doge, he already manipulated so much within Tesla, and he makes statements that are I don't want to get into it too far, but he makes statements that are categorically untrue. And one thing that Elon's very good at is making it sound like he has some innovative idea or insight, whereas in reality, he doesn't know what he's talking about. A very good example was when he was talking about that communication software that people ended up investing in the wrong ticker for. I think it was Signal. He said, "Oh yeah, if they just if they just bring a bunch of their app side things server side, that will solve their performance issues." And the developers immediately posted on Twitter like, "No, that's not the problem here at all. That wouldn't solve it at all." But when he posted it, everyone's like, "Elon, you genius! You've saved us all." So yeah, that's the pattern with Elon. Him saying that full self-driving is 10 times safer than a normal driver behind the wheel causes teenagers to drive their daddy's car and wrap it around a tree and die. So I'm not a big fan. But that's enough about Elon. Again, please don't call me pedo. Thank you. Cryptos. Yeah, so I've been doing a bunch of research, and I'm consistently finding myself. So I've always called myself a Bitcoin maximalist. Well, I've been open to the idea of changing my mind. And so at first, I was looking into Ethereum. I liked what they had to offer. I didn't like some other parts. I'm looking at Ethereum 2.0. And I got more open to the idea of, okay, so for Bitcoin, to compare it to like gold and silver, Bitcoin's kind of like gold in the sense that you really have to make a proof of work to put real value in gold. And I think that's important. I think that staking is not proof of work. Right, and I think there needs to be a clear distinction between the two. I think staking is very much closer to what we have these days with fiat, right? With printed money or pre-mined coins, stuff like that. I think that looks far more like the fiat system than it does sound money system. So I think the fact there's an electricity cost, I think there's a hardware cost, and there's an actual mining process that's happening. I think that adds value to Bitcoin that no proof of stake coin can have. But I also recognize that Bitcoin has some inherent flaws. Bitcoin takes too long to transact. It's too expensive to transact. And that together makes it, much like gold, if it's stuck in your vault, very difficult to, you can't take off a little piece of your gold and go to a grocery store and buy something with that. It just doesn't work. So this democratic environment needs something that is faster and that meets the needs of a transactable coin. And that's something we saw in history again. My major's in history, so I look at history for examples. And that's why silver and copper often as well was taken as a smaller currency. You had golden coins, and those were worth a lot. And then those were split up into silver coins, and those were split up into copper coins. And that system is very simple when you think about it, but it means that you had this mutable asset that you could carry around more easily, and that carried a certain value to it, and then you could transact right with gold, and that's what we're seeing with Ethereum, for example. Ethereum has this faster transaction environment where you can even wrap your Bitcoin in Ethereum and trade that. So you can trade between Bitcoin and Ethereum. You can go to your little gold vault, convert it into silver, take your silver in it back to the market, and pay for whatever you need to pay in the market. Fantastic. So that appeals to me. That tells me there's room for 2 digital assets, or maybe even 3 if there's a different purpose, right? And this is not even looking at blockchain as a technology, because I think blockchain as a technology can do even more. I'm looking at really tokens and coins as money. So we have these options, right? You have Ethereum, you have ADA, so Cardano, you have Ripple, and they each have advantages and disadvantages. Centralized, decentralized, a certain transaction speed, a certain transaction cost, certain plans. Cardano, very profitable if you invested in it half a year ago, but end of the day, it's still just a white paper. You can buy Cardano, but you can't do with Cardano what they promise that you can do with Cardano in the future. Blaster says, not sure if you heard, but ShakePay, which is only in Canada, I think, is releasing a credit card that buys you a bit of Bitcoin on every purchase. Do you think this is a solid idea? That sounds like PayPal has a similar system where every time you make a purchase, it saves a bit of money for you, and you gain interest on that money. I think it was called Acorn. Sounds very similar to that with an extra step. So, okay, what I don't like about that, and now I'm going to go off on a tangent, so hold the thought about Bitcoin for a second. What I don't like about that is what this company does, this credit card company does, is they make money on the float of your cash. Okay, that means that you have cash floating around. $100, $1,000, $100,000, $1 million. It doesn't matter what the amount is, okay? Cash can be put to work. At the very basic level, you can buy a US bond and make 3% per year on your cash. Okay, 3% per year on $1,000 isn't all that much. But 3% a year on $20 billion? Now we're talking, right? What these credit card companies do is they take your cash that you have parked with them and they put that to work. So they don't just invest in bonds, they buy stocks with it, they buy assets with it, they buy sometimes houses with it, they buy things with it. And that's how most of these institutions, how futures clearing houses, how any institution that holds onto your float of cash makes most of their money. And what I believe in my generation, what we have the ability now to do and the right to do is take that power away from these middlemen, right? And away from these bankers, away from these clearinghouses, away from these credit card companies, and to say, no, hang on a minute. The majority of your money is made on the back of my capital. Why? Why am I not making the majority of the money on my capital? And if you provide me with a service that's worthwhile to me, you gain a little bit of that. And that's where I think crypto plays a huge role. Because what we're starting to see with smart contracts coming up and with coins like Ethereum, but now I've also done some major research into Solana, which we'll get on in a second, we're starting to see democratized lending, where you can lend directly from consumer to consumer over a blockchain, lend your money, or you can put it to work in another way, where these services will, for example, invest your money just like a credit card company would or just like a bank would. But instead of all that money going to them and you making whatever interest rate that they offer you and you don't get a choice in the matter, right? You can't email your bank and negotiate an interest rate. They just tell you this is your interest rate for the year. Instead, you know exactly what you're getting up front. You make a deal with this organization. You make the majority of cash that you make on your float, like 98% goes to you, and the remainder is what you pay them for this bit of management. And it's a much more transparent way of putting your money to work. And then the cool thing about this is because it's on a blockchain technology, instead of like a bank where you might have to lock your money in for a year, right, for 6 months, for 3 months, because they don't want to trigger a bank run. And the reason they do that is because they leverage your money. They over-leverage your money. So if they have $1 in the bank, they will lend out $100 on the back of that $1. So if everyone suddenly picks up their $1, they collapse. This blockchain cannot do that. They got whatever cash they have, that's what they have. Okay? And instead of having these 6-month, 3-month, 9-month, 10-month, 12-month contracts, what they have is day contracts, or even less than a day, minute contracts, where you can put your money in. It will work for however long you agree that it works. Again, it's very transparent. You get told exactly what these rates are, or that the rate can fluctuate based on these and these factors. You know exactly what's happening with that cash, and you can put it to work for you. And it's an end-to-end, user-to-user lending system that puts the float of your money to work just like it does normally at a clearinghouse or at a bank. But this time, it's you profiting off that and not them. And I'm such a big fan of that. So I think that as blockchain technology gets more popular, we need to be very careful as humans, as the new generation of central banks and of these old-time, economists and bankers saying, "Oh, cool, yeah, crypto. Yeah, let's do it together, and we'll build a clearinghouse for your crypto." because that's how they make the majority of their cash. They don't want to lose that mechanic, so they're going to rebuild the system, this inefficient, heavy system, and plonk it onto crypto. And they can, if we let them. So that's my opinion about ShakePay. I think ShakePay is screwing you, end of the day. And I think that what you should be hoping, or what should be happening, is that money should go to you, and you should be able to decide what you invest in, not them. And if you decide to give it away to someone to invest for a certain fee, then that should be transparent. You should know what they charge you, you should know what they pick, and you should know what you're getting into. It needs to be democratic. It needs to be an agreement. You need to be in the light, not in the dark. That's actually insightful, so Blaster said. Well, you're welcome. So what can you do to prevent that is make sure that you don't play. It's like a game of chess, okay? Especially in the crypto sphere. The game of chess, you can change the rules of the game of chess. I can go today and change the rules of the game of chess. The problem is, if I do that, no one's going to play with me. Okay? You can change the way Bitcoin works. If more than 50% of that block votes in whatever they vote in, they can put that change in place. Hell, you can even build a copy coin with Bitcoin's technology right now. But the thing is, nobody will play. And the same will go for central bank money. We need to make sure we vote in representatives that care about sound money and that care about the democratic, more direct consumer-to-consumer communication within the monetary system. And we need to make sure that if a system gets put in place with these inefficient, money-slurping systems where these middlemen benefit, that we don't play. That we put, if we can, put our money in assets that don't play with that. Gold, silver, Bitcoin, etc. So going back from this tangent to what I was saying, we're looking for this transactionable coin in the space right now. We know what the gold is of the crypto sphere. I think Bitcoin is there to stay, and I think the reason why is proof of work. I think that proof of work system is very well preserved in Bitcoin. And the fact it's such a conservative coin, which doesn't change the rules on itself ever, is what gives it so much value. And I don't think that's going away. I think that's going up. So it's this thing you have in the vault, Bitcoin, what everything else moves off of. And we know what the supply is, and the market will take care of the price. All that Bitcoin has codified in it is what the supply looks like. Cool. Leaving us transactions. What do you need for transactions to succeed? And the answer is, it needs to be fast, it needs to be cheap, it needs to be accessible. Problem with Ethereum, I don't think it's fast and I don't think it's cheap. Ethereum is just too slow to work. And I'm giving it a fair shake. Let's see if 2.0 solves those issues. Some have speculated it will, some have speculated it won't. Maybe PayPal and Visa are onto something, and they picked Ethereum as their transactionable coin for the reason that they know 2.0 about something about 2.0 that we don't. And I'm keeping myself open to that option. I am, because of that, somewhat exposed to Ethereum, and I'll maintain that. I'll see what happens, and if that doesn't work out, I'm also well aware that the price of Ethereum is going to crash. There's a better coin. A couple weeks ago, or a little less than a week and a half ago or so, we ended up, and I want to give Monk, who was in the chat channel with me a second ago, I don't know if he's still here, I want to give Monk a bunch of credits for doing so, for pointing it out to me. There is a new coin, 4th generation crypto, by the name of Solana. And what I really like about Solana is the amount of transactions it can do. Yeah, man, shout out to Monk. He's on our Discord, giving hot takes left, right, and center, and I'm loving it so far. The thing I like about Solana is how many transactions it can process, how cheap it is to process those transactions, and how easy it is to build onto their blockchain. I think that's causing DApps, right, DeFi apps. It's causing DeFi apps to sprout out left, right, and center with tons of applications, from democratizing music to democratizing the way you lend out your money. That thing I was talking about with floats already exists on Solana, right? All that needs to happen is for it to get adopted. And I think we're well on our way to get there because the people behind Solana have backing from people that are very active in politics. Sam Bankman-Fried, one of their biggest funders, is the second biggest donator to Biden's campaign. He has a app built on Solana. So he has a distinct interest in using Solana to achieve his goals, which in his case is revamping the finance system. He wants to make stocks available 24/7, and he wants to make some democratic. He wants to get rid of dark pools, clearinghouses, all that bullshit. And instead, he wants to put it on a blockchain and run it 24/7. Will he succeed? I can't guarantee that. But what I do know is that I like the plans, I like the tech, and I like the people that are behind the project. And I don't just say that, oh, he's a cool developer. Speaking about the developers behind Solana, which I think they're very professional developers in a very professional environment, which I much more appreciate than all these other shitcoins that are out there trying to do the same thing. The second reason why I say that is because they have this funding from these politically active people that are looking to use Solana's technology to make actual changes in our financial system. If you look at what Solana themselves have said, is 20% of GDP gets destroyed by our current inefficiencies in the financial system. If Solana can solve that, that means people can work 20% less and make the same amount of money. That's huge. So, to close out my stream today, I agree with those goals. I love it when we remove inefficiencies. 20% GDP added because of a cryptocurrency and a blockchain that's just so smart design, that's designed so smartly, and that solves a lot of problems is amazing. They of course have hurdles to cross. Things like current leader being a block leader, that's a security risk, and a bunch of other things. But doing my research, over the past week or so, I've become increasingly convinced that Solana is that transactionable coin. It's that silver within the crypto community. We'll see if I'm right or wrong. There have been things in the past that have been better than another thing on the market and yet never broke through. I'm thinking Betamax instead of VCR. So we had things that broke through anyway, like VCR. It became the biggest, even though it was more expensive, more inefficient than the other method. It's just what broke through. So maybe we get the same thing here, where Ethereum simply stays the king, or ADA becomes the king. And yeah, that might happen. So I'm not all in on this. Again, only speculative money in crypto for me, but it's enough to be interested, and I've taken a position, and I'm looking forward to being on chat with you guys and following progress there and talking about it, following the news. And I think you're going to hear the word Solana out of my mouth quite a bit over the next few months, and I hope to become an expert on at least the news flow there and how the technology works. And yeah, I'll keep you guys updated. And of course, I'm not going to stop with stocks. I think that's still going to be the primary thing I do. But I think people can do two things. So yeah, thank you guys so much for watching. It's been a pleasure as always. Such an honor to have all of you here on chat with me today. Thank you, Blaster. Thank you, Blank. Thank you. Thank you, Brondo. Thank you, Jerry. And thank you, Potato. All of you, super appreciate it. Kanu as well. You guys are awesome. And I look forward to seeing you guys next week, where hopefully we get a chance to kidnap Dr. Chan and talk about China, because I think China has a major influence on how geopolitics play out over the coming months, if not years. Have an amazing evening or an amazing day for you guys in America, and see you guys on the Discord. Ciao.